Right then, that brings us neatly into our final panel of the afternoon on battery materials. And I'd like to welcome our panelists up to the stage. We have Alice Yu, who is a consultant from CIU Group, who spoke earlier. We have Alberto Migliucci, who's CEO and founder of Petra Commodities, based here in Singapore. And we have Ian Roper, who's the general manager of Shanghai Metals Markets Singapore, also based here in Singapore. So, panelists, please take the stage. Welcome. A little round of applause. Thank you. Welcome our panelists. As they get settled, I just want to remind you that we're going to have some drinks after this upstairs at the Lighthouse restaurant on the top floor. And also, to remind you to pick up, if there are any left, there are some knocking about, a copy of our battery materials edition of the Assay magazine. Please do pick this up. If you can't find one, we do have one online at theassay.com. So make sure you get hold of your copy. I think it'd be interesting possibly to start this panel with Alice. Your presentation, covered a lot of ground. For those who didn't see it, not to give the whole presentation again, but just in summary, your thesis on the lithium market is, if I'm right, looking at going forward, great demand growth, but also strong supply growth, possibly supply looking to outstrip demand in the next few years, but in the long term, balancing out, and you're going to see great growth going forward. Is that?
Yeah, that's a good summary. And I think it's important when looking at the lithium market to also notice that the product that's needed by the market, lithium carbonate and lithium hydroxide, that's a specialty chemicals market. So you can't view it as bulks.
Yeah, so that brought me to a question, actually, which is that people give headline figures about the amount of lithium that will come on stream if all of these projects get built. But do you have any figures on sort of the utilization rates of those products? You know, how much of it is actually usable?
Do you mean the projects?
Well, the projects. If someone's, if you look at, a lot of people will say, okay, there's all these projects going to be built. They're going to be producing this much, lithium carbonate equivalent. But looking at the demand going forward, and given that a lot of the companies are going to be using hydroxides, which you said, the best come from a hard rock source, whereas a lot of the new supply coming online comes from brines producing carbonates, is there something we're missing here, which is that some of that stuff is not actually going to be, there's not actually going to be a market for it?
So firstly, all the volumes of projects, not all of that will come into stream. That is as in any markets. Then secondly, the capacity utilization rates of lithium chemical plants, whether that's using brines as feedstock or using hard rock. So existing capacities are not producing at 100%. Very few of them do. Then secondly, for any new, so China has plans for building new lithium conversion capacities. And then for, at least in their first year, they won't be operating at nameplate capacity. They need to ensure that they have the raw materials and there's compatibility between the plant design with the grade and how coarse the material is or how much iron content that's in the material, and that will affect their utilization rates. So you have to see the market in different tiers and different products, and yeah, they're not operating at full capacity.
So my point was, and it's probably quite a difficult question to throw you first of all, is that when you look at these headline figures that people throw out there, it's a lot more complicated than that.
Yeah, exactly. So the headline figure would usually put together demand with what's coming out of the ground. So the point of my presentation was to go from the mine to to go from lithium in the ground, digging that up, to supplying to EVs. There's a complex value chain. So those numbers don't account for that.
Absolutely, and you probably need someone like CIU or Shanghai Metals Markets to help unpick all of those complexities. Nice little plug there. So, Alberto, just bring you in. As an investor looking at the battery material space, particularly lithium, if we start with lithium, what's your view at the moment, the market?
Look, lithium's hot, there's no doubt about it, and it's one of those commodities, and we've seen it being commodity guys, when there's cycles and you're up. Doesn't matter who you are, if you're caught up in that cycle, you either go down or up. And I can cast my mind back a few years ago when coal was hot. It didn't really matter what coal asset you had, but you're getting big valuations, and there was, I was flying into Jakarta airport, and a customs officer told me that he had an uncle who had a coal mine when coal was hot. So everybody from the customs guy to the taxi driver to the pineapple farmer, they all wanted coal. And now we're actually seeing that on lithium. As an investor, I also speak to a lot of high net worth individuals in Asia, and if I told them, look, there's a great coal asset at the moment, they wouldn't be interested. But if I said lithium or cobalt, it piques their interest. So it's the rising tide. So for all you investors out there, I think if you generally invest across the board in lithium in various projects, whether they're producing or up and coming, you'll probably make money. Now, you should read some big disclaimer on my website before you say that, but it's a momentum trade. It's obviously a great story. You can poke a lot of holes in some of that story, and there's no doubt that at some point that bubble is going to burst. I don't want to say that now because half of the audience will probably lose their job, but I'm just saying that it's still on a high. It had a bit of a low about a year ago, and I think it's picked up its second wind. So that whole EV space is real, and it's here. And it is a revolution. So I do think lithium's a good metal to invest in. If you want to go down in more detail, some of those lithium plays that had that first mover advantage are probably going to do better because they're more advanced in exploration, getting into development and then production. So those guys are probably up the curve on the value chain, as opposed to a lithium explorer who's just started now. He's quite behind, and he may miss the curve because there's only so much capital to go into this. And even though the demand forecasts are quite high, there seems to be quite a lot of supply if all these projects go ahead. So I think lithium's generally a good commodity. There's still a lot of positive aspects about the metal as an investment. It's on every. The other thing I've got to say about lithium, they've got the best marketing campaign ever, because as you know from a lithium-ion battery, lithium isn't the actual most common metal in most of those batteries. It's depending on which technology you use. It's actually should be called like nickel cobalt, and we'll go on to that shortly later on in the discussion. But lithium's got the marketing rights. It's all about marketing, right? Coca-Cola, McDonald's, and lithium. And so when you say lithium-ion battery, it's only, and the experts here will tell you how much percentage-wise there is in some of those batteries. But, for example, on the Chevrolet Nissan cathode, 60% of the metal is nickel, 20% is manganese, and 20% is cobalt. So 60, 20, and 20 makes 100. So the lithium would be a very small rounding error to that, if that at all. But people still refer to those as lithium-ion batteries. It's just a term. So I guess lithium's still hot. It's got the name out there. It's got a lot of investor interest. I mean, it's great to see, the previous presentation, Namaskar, and I'm a finance banking background, put together an $800 million project financing asset for a metal like lithium. I mean, that's amazing. When I was a banker, that was unheard of. And actually, even 3 years ago, if someone said to me, we've got a project and we have to raise, do a $800 million project finance. Project finance, by the way, is the most conservative type of finance you can get in banking. It's the lowest coupon. Project finance bankers typically don't make as much money as us investment bankers, but they're smarter because they're more conservative. So the fact that you've got a bunch of conservative banks who get into project finance and you can get debt for $850 million for a lithium project, that's pretty impressive.
Well, to be fair to them, I mean, we saw them three years ago around the sort of circuit, and the prices of lithium hydroxide product they were going to be able to sell, the price at that time was way lower
Oh,
than
exactly,
it is
yeah.
now. And they still had a decent looking project. But at that time, all of the bankers were saying,
Yeah, and I was
no,
one
thank
of them. And the fact is, project finance is long-term financing. I don't know what the tenor is on that asset, but it's probably more than 5 years, probably 5 to 8 years or 7 to 10 years. That means that the banks have taken a price deck of lithium. So your comment about 3 years ago, lithium prices. So they've probably taken a conservative price deck, which I'd be interested to see what it was, which would really tell you where they think the market's going.
But to go back to Alice, your slide there, where it showed the lithium price, the lithium hydroxide and carbonate price dipping, it didn't dip all the way, did it? It flattened out and then was on the way up again.
Prices will still operate at a higher level than where it started off with in the beginning of 2015, because we do need additional supplies into the market, and those will be higher cost than what was there already.
Ian, to move on to you, let's get some thoughts on China and their sort of usage, particularly in the EVs space. Do you have any info for us on China's development of EVs and their plans, and how realistic some of the figures we're hearing are?
Yeah, I mean, this year the sales have been amazing, right? The first few months of the year, I mean, we're annualizing well over 1 million EVs to sell this year, and total sales so far to date is only about 1.7 million in the fleet. So the sales are going really, really well. I've always said, look, China is going to be a massive leader in EVs. I think some of the, a lot of the 2025, 30 forecasts are like, if EV penetration gets to like 10% or something globally, China, it could be pushing towards 50%. They adopt stuff so quickly. And don't forget, the key advantage in Asia is that most people live and work in high-rise buildings with grid power into the basement. So you can plug in as many EVs as you like for charging. But it is massively policy driven. I mean, I always like comparing Hong Kong and Singapore. So I mean, Hong Kong, there are Teslas and EVs everywhere because the subsidies are good. They're desperate for clean air. And were good. But the key is power, right? I know people who've gotten there and they say they haven't paid for a charge since they bought it, right? Because you get free charging in shopping centers, in offices, in homes and everything. Whereas Singapore, has anyone seen a Tesla since they've been here? It's like, I think there may be 5 in the entire country. Because the government, we have oil refineries, but the marginal power is imported from Malaysia. So the Singapore government has no interest in getting the power consumption higher. So that's why there's no support whatsoever for the EV story here. So policy is extremely important, but China is clearly very keen on it, and the Chinese car companies have been very aggressive. And the scale of the pace of the change is just immense. I mean, certainly through the chain, last year there was a massive shortage of the processing into the batteries. So you saw things like the DSO, people who were selling DSO into China, hardly any of it was getting processed because they had an abundance of spodumene and no processing capacity. So what's the point? Whereas now the processing capacity has been built, all the lithium salt's increasing, and so now you're starting to process the DSO. So China is moving so quickly on the development, the build out, the number of projects they've got on the demand side of things. And yeah, we're very, very bullish on the demand. And then, the economics are working. The prices are high and will stay high, as Alice said, to incentivize that supply. But personally, I mean, our view is we're very much favoring more on the cobalt and copper side of things. They'd be my favorite picks as EV plays, mainly just because from lithium and nickel perspective, I don't see there's any great fundamental shortage of those, right? We have a lot of those resources easily to develop and projects are going on. Whereas something like copper's already got a phenomenally tight structural story without EVs. And then you throw in the whole EV story, the average copper in an electric vehicle is 80 kilograms versus 20 in a regular sedan. And it's the build out of the charging stations. I mean, China's massively behind building out the charging station network. They've only got something like 400,000 charging stations. They're going to build 300,000 this year alone.
How many do you think they need?
A couple hundred kilograms in each one. So the optimal ratio apparently is about 2 to 1. So for every 2 EVs, 1 charging station. So if they got 1.7 million on the road and only 400,000 charging stations, that's kind of a long way behind. But then that's because you do have more for the residential and other accessible ones that are probably
Typically,
not counted.
how much copper goes into a charging station?
I think it's about 150 to 200 kilograms on our numbers. Alice, do you have
It's
any
not
numbers?
in my head.
Yeah. So yeah, up to a kind of
200 kilograms in each
at the
charging
high end.
station, and might need 800,000 charging stations.
Yeah. So it's certainly a
Lots of
big
copper.
incremental help to what's already a tight market. That's
And
the
I
issue
suppose that
with
doesn't
the lack of
include
supply growth.
the wires to the charging station as well.
That includes a little bit of the local
Yeah.
wiring, but not whole grid stuff. But the grids are generally, in China, you've got grid power pretty much everywhere. You don't have to lay too much.
In Japan, there's actually more charging stations now than petrol stations, which is pretty interesting.
That's,
Well, one of the interesting cities is Taiyuan in Shanxi, the heart of coal country. So I was there early last year, and obviously they've got all the coal, they've got very bad air. So the entire taxi fleet is EVs. You can hardly walk down the street for all those rental bikes and then EV charging stations. It's like there's no space.
What's the
for
sort of price
pedestrians
point
anymore.
for an EV in China?
Well, that's why it's very subsidy driven, right? So I remember meeting some companies 2 years ago. The subsidies on the electric buses, if you were a transportation company, you could actually get free buses in a lot of provinces because you got federal subsidies and state subsidies, provincial subsidies and local city subsidies that were greater than the cost of the bus. So you're actually building a free electric bus fleet. So they've wound down a lot of those subsidies once the sales took off. But yeah, that's why it's very, very clear. And a lot of the Chinese subsidies were focused on some of the smaller, cheaper, shorter range EVs. They're rolling some of those back now and really trying to move the sales to more of the bigger EVs. So that obviously means more stronger batteries, more power.
There's also some talk of electric trucks as well now.
Yeah, across the board you've got, trying to...
It's a whole market that hasn't really been touched on yet, and
Yeah.
probably doesn't figure in people's future calculations as well, maybe.
Yeah,
know
true.
if that's
It's
true.
not something I've done any work on.
Do you look at any of that? Alice?
We split EVs into light duty and heavy duty based on the size. So it's probably captured in heavy duty. But on the subsidies, on production subsidies, the Chinese government actually withdrawing production subsidies by 2020. So they've got this dual credit and quota system, which it's quite complex, but essentially 10% of automakers' sales needs to be EVs. Otherwise, you have a negative credit and you have to buy. So it's a way for the government to continuously to encourage EV uptake without having so much financial burden. On the consumer side, there's still subsidies for buying EVs, both financial and non-financial. And I've seen a figure about $8,000 per vehicle on average for subsidies for consumers.
An interesting trend that you touched on in your presentation was the fact that you've got a number of car companies trying to secure offtake from projects. You mentioned BMW, Toyota, Great Wall, and Tesla, obviously. But that's just 4 car companies. There are hundreds out there. And not that many projects to go around. Are we about to witness a big kind of scramble for assets, do you think?
I think for car companies to take a direct share in assets is completely different businesses. What they want to do is to secure the volumes, then maybe hand over that offtake to a chemical, to that, for example, battery or cathode makers, say, deal with it. The numbers are not large, but it's showing a trend of what's important strategically in automakers' mind, which is to make sure they have long-term security. They want the volumes to be there when they need it. So the scramble for resources has been seen. So initially, conversion capacities were scrambling for volumes of spodumene, and so it manifests in different ways. But you can see the whole value chain getting more integrated. Battery makers have also invested. So CATL has invested in North American Lithium, which was a idled project. So that shows every stage of the value chain, they're trying to go upstream to secure raw materials.
Absolutely.
You know, exactly right. That's an interesting trend, but also an alarming one. As I said earlier, we kind of repeat ourselves in history. If I use the coal example, in 2009, 10, 11, 12, coal price was going up from $50 to over $100 plus. There was a large global scare that we were going to run out of coal, and the coal price just kept on going up. And as a former M&A investment banker, when I used to do coal deals and there was a coal asset for sale, I typically go to other coal companies and say, this asset's for sale, you want to buy them and see what synergies there are. So it was coal company buys coal company. And then came along in 2008 and 9, and I was involved in this, a power company from Korea would buy a 20% stake in a coal company in Indonesia. And this was a new trend. I mean, we're used to it now, but back then I was shaking my head. And as an investment banker, you work in vertical. So I was a mining guy, and all of a sudden I had to talk to other investment banking guys who were like the utilities guys, the electricity guys, doing the same deal. And it was a cross-pollinization. So you started getting this vertical integration, power stations wanting to secure supply of coal and buying a stake in power, in a coal project. Those power stations know nothing whatsoever about coal mining. Yet they took major supply stakes and also management positions, etc. And that was quite pervasive, and that created a big, I guess, and then it got even, I don't know if it's worse, but then you get private equity guys coming in and buying into power stations, which wasn't common before. And then you get private investors and high net worth individuals buying into stations. And I had, the classic example was, I was working with an Indonesian coal company and an Indonesian tycoon who made all his money out of pineapples, was a consumer product, bought into a coal mine. So the joke for me was, you know, when a pineapple farmer starts buying into coal, you know it's time to exit. You know, he did well, by the way, and later on he invested into, he's one of the first guys to invest into Uber. So he's one of Forbes' top 40 guys. So I shouldn't, you know, be too disrespectful to that comment. But we're seeing that now with lithium. And as Alice said, you've got car companies buying into lithium or wanting to buy into lithium projects. I mean, this is kind of, for me, unheard of.
Small stakes.
Yeah, I know,
Yeah,
but still
exactly.
buying. I mean, why would you want to buy? You stick to your car manufacturing, right? Let the miners do the mine. The fact that that's happening means it's a really hot industry, and people are scared of security of supply. So the only reason you want to take a small stake is you want to. It's like the Japanese in the 70s and 80s and 90s. They all took 5%, 10% stakes in some of the biggest mining projects around the world, because Japan hasn't got its own resources, so they just want to secure the supply. They didn't really want to become miners, so strategic. So it's interesting that the BMWs of the world are doing that.
And the SoftBanks, of course.
Yeah, and it's not only the cars, and Alice said, it's also infrastructure players and other battery makers are going vertically up and downstream. So very, very interesting times for an M&A banker and consolidation of the industry.
Absolutely. And of course, as I mentioned, you know, Namaska earlier mentioned the SoftBank Vision Fund. It's like the, you know, the world's leading venture capital fund investing in a mine. You know, old world meets new world in a wonderful marriage of $100 million. Anyway, cobalt. We mentioned cobalt earlier. Is this going to be the big stumbling block? We're going to run out of cobalt. These batteries need cobalt. You can't engineer cobalt out of a lithium-ion battery right now. Do we have enough?
Yeah, so there's a lot of work going on the recycling side. You know, China's definitely looking at that, and as the EV pool grows, they know there'll be a big recycling market later. So that's one source people are looking at to try and fill those deficits. And the other thing is, we're a bit concerned shorter term that there's a lot of hidden cobalt inventory in China, right? Cobalt's been, certainly quite a few Chinese funds were quite early on the cobalt story and have been hoarding a lot of physical. So we think probably 20,000 up to 40,000 tons of physical cobalt in China, which, you know, they're not going to sell while the price is still going up. But if you got kind of better news flow out the Congo and the cobalt prices started rolling over and they decide to take the profits, then that is, you know, up to a third or 40% of annual supply sitting there ready to go. So there's a kind of short-term cloud overhanging the cobalt price. That's a little bit.
Where
of a
is
risk
this
that we worry
cobalt?
about. Probably in some investor's villa on a golf course near Nanjing or something.
How do you find out about these things?
I'll find out.
Yeah.
How do you find out about these things? I mean,
Just from the kind of Shanghai investment kind of community and kind of chatter on who's doing what. So that's certainly a game a few of them have been playing for a while, and we know some people are holding quite sizable positions. But like I say, they're not sellers, and that's not a structural source of supply. But no, cobalt's the one that does structurally look very strong, and especially with all the Congo issues, right? I mean, that's where you talk about the investment. I mean, the investment from a branding sector to secure a kind of clean cobalt supply is probably a huge premium on that from a branding perspective.
Yeah, look, I think that's right. I mean, cobalt's got a really interesting play. It's almost like the perfect storm. 60% of the world's, more than 60% of the world's cobalt reserves are in the DRC, Congo. Likewise, more than 60% of the world's production comes from the DRC. So there's a massive concentration risk in the DRC. And you just have to Google DRC and Amnesty International, and you'll see some of the issues that country has. There's a lot of issues now. If I was to name 6 or 7 risks from the DRC, like any developing country that has this newfound wealth, they start to add new taxes, and there's elements of nationalisation or expropriation of certain assets. The state government company there is playing some games. So there's a lot of issues with not only security but human rights. There's issues with the increase, the change in the mining law. This is nothing new for the miners that have worked in, developing countries for years, where all of a sudden that jurisdiction decides to change the mining law to their favour, better taxes. So it's a fluid environment, and it's kind of a risky environment, and so that's one point. So concentration risk. So there's a scramble around the world to find cobalt outside of DRC. So there's an investment opportunity anyway. And I've been looking for a while for any cobalt projects outside the DRC in places like Australia or Canada, and they would be worth their weight in gold, excuse the pun, but because that's a diversification of risk. The other thing, as Ian mentioned, was there's that conflict metals aspect, blood metals aspect, like we had in diamonds. You've got blood diamonds, and you've got to source the provenance of where those diamonds came from, and hence that whole Kimberley process came in. So people feel better that the diamond they're buying in Antwerp doesn't come, it's not a blood diamond. There's a similar parallel issue now facing cobalt. Now the thing is that most of the raw cobalt just gets processed then in China. So all the Apple and Samsung buyers and the rest of it just think they buy their lithium-ion batteries or their cobalt source from China, but it's actually an indirect, route via DRC, China, and out to the Western or developed world. So there's a lot of pressure on the Apple and the Samsungs of the world and the BMWs to buy ethically sourced cobalt, and that's going to play in it too. And I think you'll see in the next few years that companies will all say in their annual report, we've bought cobalt from these sources. So that's going to be, so there's not only a supply issue, there's a concentration issue, there's an ethical issue, and the next thing is the geological issue. Is 98% of the world's cobalt occurs as a byproduct of either copper or nickel. Now copper is okay because copper is quite hot and the price is okay, but nickel price hasn't been doing that well. So you've got these nickel projects that, first it's a certain type of nickel that's needed for batteries. So Alice will pick up on this later, I'm sure. But so you've got nickel projects that aren't being developed, but there's some percentage of copper in there as a byproduct. So cobalt is almost at the risk of whether a nickel project goes ahead or not. So its geology itself, that at 98% of the time it occurs with another metal, complicates the whole supply structure. So it's a good thesis as an investment. Cobalt's the place to go. This is why people are hoarding it in Shanghai bars and Ian's garage. Alice's handbag.
Any questions for our panel? A question here from Edward.
My question is why hasn't hydrogen fuel cells come into play here if we think that we are looking at constraints in the lithium space?
I'd say that
Very good
China's
question.
definitely looking at that, and you've got the kind of lithium-ion ones are a few generations ahead, right? Because they've been around for a while, and they kind of had confidence it worked. I mean, the Chinese started with very low-end battery technology for the buses, and then you saw the kind of famous pictures of them catching on fire and things, and so they're moving through the technology chain, trying to improve, looking at new things all the time. So yeah, no doubt, quite a few people are looking at those, but the technology is still developing, and it's not as commercialized as the others yet. But no, that's the big risk for the battery space, is which technology ultimately wins. I mean, that's been the issue where you get the tech guys in the lab come up with the optimum one, but the battery companies, the manufacturers, are still run. They still have to go through auditors and accountants, and those guys are like, well, we can't source those materials. So that's why you've already seen that shift to the kind of nickel bias, on the view that nickel's more plentiful than cobalt and others. So, do you then see the next leg of, okay, let's not use any of those at all, and solid state and all that kind of stuff. So yeah, they're investigating. You see Chinese companies investing all over the place in different technologies. So it's a moving feast. So yeah, but at the moment it's hard to call which technologies are going to prove to be the winners.
I think fuel cell is one of the technologies that could be used in batteries, and there will be continued R&D in battery technology for better performance, for cheaper cost. So right now, lithium-ion battery is the dominant type of choice for EVs, because battery makers are invested in it. It's being proven commercially viable, and automakers are also believe in it. To transition to a new battery type, we think it's going to take around 10 years or more for the whole supply chain to accept it. So apart from cost, I think time to market for commercial viability is a key factor affecting other battery types to enter.
Is
into
significant R&D going into fuel cells at the moment, though?
across everything, so solid-state batteries, fuel cells, and then depend on the application, whether it's for automotive or for energy storage, there's vanadium flow, there's all sorts of things.
I heard somewhere that, and this might be completely, I might have dreamt this or something, but anyway, I heard that fuel cells are being looked at for use in shipping as well, in sort of big container ships and things like that, but that might just be one guy somewhere. Anyway, any other questions from the audience? Well, it is 5 o'clock, so that means drinks on the roof. There's lots more we could talk about. We didn't even get into nickel sulfate and all those fascinating avenues we could have gone down, but we'll save that for another day. Can I have a round of applause for a very interesting panel?